everybody. Jessica Beggins here with Century 21. I have a special guest here today. This is Chad Morris with Discount Loans. So this is out of special request of some of my followers out there who have been asking what the difference is between using something like the Rocket Mortgage program from Quicken Loans versus using an actual mortgage lender. So I've got Chad here today to kind of help talk about the differences. So let's kind of start it off in a scenario that most home buyers would be starting from.
Okay.
Let's say I make $1,400 a month and my husband makes $1,600 a month. What can we afford and what should our first steps be?
Okay, great, Jessica. Thanks for having me here today. And to all you out there, thank you for your time. Again, my name is Chad Morris. I'm with Discount Loans. We are a licensed mortgage broker here in the state of Florida. And we're going to talk today about some of the benefits of using a mortgage broker or Quicken Loans or maybe your Bank of America or Wells Fargo options. And so to get to your point, basically you've expressed that you and your husband make $3,000 a month. One of the biggest things to consider obviously is how much of your payment is going to be in relationship to your monthly income.
Okay.
Now we work off gross monthly income, which means before taxes. So it's your actual W-2 income, not what you take home each month.
Okay, that's good to know because taxes are awful.
Yeah, so if you make $3,000 a month as a husband and wife, and that's before taxable income, the standard is you'd want your house payment to be about 30% of your income. Okay, so $3,000 a month, you want a house payment of $1,000 a month. $5,000 a month income, ideally you want your payment to be around $1,500 a month.
Okay.
That it would be called your housing ratio, which is the house payment compared to your gross monthly income.
Okay.
The other big variable consideration is what's called your total debt to income ratio, which you would take the proposed house payment. In this case, your family makes $3,000 a month. Our target is $1,000 a month for our house payment. And then you add to that items that appear on your credit report to that $1,000 payment. Those are going to be things like student loan payments, credit card minimum payments, auto loans, any other types of commercial loans you might have or consumer credit you might have. It does not consider your cell phone bill, your insurance, homeowner's insurance payment, how much you spend a month in gas or a month in electricity. None of that stuff comes into play. It's strictly what's on the credit report.
Okay.
So, for example, if you have in your case, you have a $300 a month car payment, that would be now $1,300 into the $3,000. Okay,
Right.
you divide $1,300 by $3,000, and that would create your total debt to income ratio. Let's just say that's the only bill you have. Well, when you work with a lender, they're going to determine your total debt to income ratio, and ideally that is going to max out about 43% on conventional loans.
Okay.
There's all different types of financing. When you deal with a mortgage broker like myself, and I'm one of the owners of Discount Loans, you can reach me at chad@discountloans.com, or you can reach me by phone at 813-495-9542. But a big benefit of working with a broker is we have relationships with different wholesale lenders, different credit unions, all different sources for lending.
Okay.
And so we have like 20 lending partners. If you go to Bank of America or Wells Fargo, you're limited to just the products they offer. Okay, so for example, Fannie Mae and Freddie Mac set these guidelines of 30% housing ratio, 43, 45, 47% debt to income ratio.
Right.
The big banks will have what are called overlays, which means even though Fannie Mae, Freddie Mac, or FHA, which is another great first-time home buyer program, Fannie Mae and Freddie Mac and HUD will allow the debt to income ratio to be much higher. The banks won't. So it's very common that people fall out at Bank of America or Wells Fargo due to debt to income ratio, but that's just because they're being restrictive. We can still get the loan done as long as we can get you approved through Fannie Mae and Freddie Mac.
Okay.
So Fannie Mae allows up to 48% total debt to income ratio. So that extra 5%, the 43 to the 48%, could be the difference in you getting approved or not.
Right.
In addition to that, FHA, another very popular program, it's a very popular with first-time home buyers. It's a great program. It's easier to qualify with regards to credit score. It's easier to qualify with regards to down payment, only 3.5%. So on that same $200,000 house, you need $7,000 down instead of $6,000, which is still can also be a gift from a family member or your own savings. It can even be a gift from your employer. There's lots of sources you can use to get the gift for the down payment. Now the donor has to express there's no obligation to repay them. It has to be a true bona fide gift.
Right.
They have to provide documentation as well. So we have to make sure we check every box and dot every I and cross every T during the loan process, and that's my job as a loan professional to make sure that we kind of see anything that could come up that could mess us up, and to make
Right.
sure we address it right away and have a clean, smooth process. Bank of America, Wells Fargo have overlays. We can go straight off of HUD's approval, FHA approval, or the conventional approval. And again, with FHA, you can go as high as a 57, 58%
That's
debt to
a lot.
income ratio,
Yeah.
where still the bank might max you out at 45%.
Okay.
Again, that would give us more buying power.
So you being a broker are allowed to then use those other
The
guidelines
approvals
rather than.
to go to directly off Fannie Mae's approval versus the overlays that they might have.
Okay.
We obviously don't want to put people in loans they can't afford.
Right.
And if your house payment is 57% of your income, that doesn't
You're-
leave a lot of
it's
money for life
food
and everything
and-
else you need.
Yeah.
So we don't normally try to put people in that situation.
Right.
But you could have a situation where the husband has good income and good credit, and the wife has poor credit and can't go on the loan.
Right.
But she makes another $3,000 a month that's not being even considered in that debt to income ratio.
Right.
So that would be a reason why we might say, okay, we'll put Mr. Jones in this deal because we can see that there's all this other income the system doesn't even know about.
Right.
So
And
even though the
you know
system says
about it
57%,
Right.
they're really like 47% because of all this other income.
Right.
But the wife couldn't go on there for whatever reason. So those are things that we can do as a broker to make sure we set the loan up properly to give you the best opportunity to get approved and buy your first or second home.
Right.
And so
So
that's,
is that something that if you're, because a lot of people do everything online now, right? So they'll go onto Realtor.com, they'll find a house that they like, they'll contact the agent, they'll barely even see anyone in person, and then
Right.
they want to qualify for the loan. And, you know, Rocket Mortgage and Quicken Loans is advertising everywhere.
Sure.
If they just go in and put their information online, are they going to get those same benefits? Or is this something that, you know, only working with a mortgage broker rather than this type
yeah,
of
so if
system?
you work with a direct lender like Quicken Loans,
Mhm.
one of the, there are powerhouses, no doubt about it. They're everywhere. They're ubiquitous. You can't go anywhere online or on radio or on
Without
TV without seeing a commercial. So
Yeah.
we understand that their model is powerful, and they, I guess what I would say compared specifically to Rocket Mortgage, which is their online application, I know in my experience, a lot of our local real estate partners that we do a lot of business with have very little confidence in a Quicken Loans approval because they
Yes.
don't feel like they've been asked the proper questions to get that kind of personal touch that you would get through somebody like me
Right.
to make sure we understand the full scenario, what the goals are
And you're
for the
not
family.
lying, typing in your numbers.
Right, and saying I make 60 grand a year, but only 30 of it's salary and 30,000 of it's commissions, say for example.
Right.
But to the novice home buyer, they just think I make 60 grand a year, so they're going to put 5 grand on the income line.
Right.
Well, the truth is, if the commission income hasn't existed for 2 years, you can't use it.
Right.
So in
There are a
reality,
lot
they
of
only
that.
have 30,000 they got to qualify on,
Mhm.
and that's something that the computer might not, to ask them. Where if they're talking to me or one of my associates, right away we're going to say, what's the nature of the income? Is it
Right.
W-2? Is it tips? Are you a bartender? Are you a waitress? Are you a server?
Right.
How do you make your money? And it's very, all those things matter as to how likely they're going to get approved or not.
Right.
So having that personal touch of somebody like me versus somebody who's hundreds or even thousands of miles away that is just kind of turn and burn, their whole thing is to do a ton of deals,
Right.
thousands and thousands of deals a month, where our goal is to make sure we keep our real estate partners happy, our referral partners that we have from all over the area. And the way we do that is making sure we have a good name in the area.
Right.
And making sure that we are sending quality deals to our title companies and to our real estate realtor partners.
Yeah.
And the way that's done is just by taking extra care during the application process to make sure you set the deal up properly.
Right.
The deal
Yeah,
is
'cause
only
the
as good
worst
as you
part-
set it up. Right.
The worst part is when you get maybe 3 weeks into your deal and you're closing in a week and a half maybe, and all of a sudden the lender that you're working with says, "Oh,
Do we have an
we
income
missed
issue?
something." Yeah.
And you should never have an income issue 3 weeks into the deal. That
Yeah.
should be known before the person ever goes shopping.
Yep. Oh, it's just
And
it's
then
awful.
you just
that
wasted a lot of people's time. You've got a buyer who was excited because they thought they're about to buy a house and
Yep.
nobody ever asked them the right questions, and now all of a sudden the deal's falling apart.
Yep, the seller's already packed up and moving out, and
Yeah.
title companies got it
Done
on their
their work.
schedule for closing.
And your realtor has worked hard for you to help you get the right house, the right
Yeah.
deal. And you could have spent weeks just even finding the house.
Right.
And then you get
And then you maybe a couple
contract.
days negotiating, and then swearing that your lender is good and your buyers have good financing, and then all of a sudden you have
Blows
to.
up on
I
you.
have to be the one who tells the other side of the deal. sorry, my buyer can't purchase anymore, and
Yeah,
it sucks.
and it's not
To be
it's not
brutally
good.
honest,
So we
yeah.
want to make sure that never happens.
Right.
There's some things that sometimes it will happen, and it's just unavoidable. For
Yeah.
example, income shouldn't be an issue.
Right.
Credit reports shouldn't be an issue. The assets to close shouldn't be an issue.
Right.
Those things should be dealt with
But
right up front.
Sometimes people will buy a car, or maybe they'll go to Ashley Furniture and buy a couch and a whole dining room set and maybe a bed, a whole bed set, and then
to that point, my very first deal, I started this business in 1998, getting in the mortgage business. My very first deal, I was so excited. I had the loan, what's called clear to close, which means it's 100% approved, no issues.
Yep.
The lender can and will pull the credit right before they send out the closing docs to make sure you're not trying to buy two houses at the same time or doing some type of fraud,
Right.
which unfortunately in our world happens. So they have to protect themselves. So they pulled this people's credit, and they had gone to Rooms to Go and bought a whole house of furniture, like $5,000 worth, that was showing up on their credit, and they didn't qualify anymore with that payment being factored into the debt to income. I had to call them and say, you're getting denied. And obviously we coach people up, do not mess with your credit, do not
Right.
change your job, just
Yep.
let's get our deal done, and then life goes on. But so that's a hard lesson, obviously, but they didn't know, and they didn't think it was going to matter.
Right.
And it was my first deal. So I've done hundreds of thousands of deals since
Right.
then. And now,
We
and
know
obviously,
now.
I learned the hard way the first deal too. 'Cause
Right.
I'm like, what do you mean they're not going to qualify?
right.
So it's important that you have a knowledgeable loan officer who knows to coach them up right, put the deal together right. Again, working with a broker, if you have a unique type of property that maybe can't get financed because comparables are hard to find, which
Right.
is part of the appraisal process, we can maybe try a credit union we work with that can just make kind of a common sense judgment on the deal.
Right.
We actually can send deals to Quicken's wholesale side. So
Okay.
even if you were going to use Quicken, I have access to the exact same programs and underwriting, and even a better rate than they'll offer you, the public, because they want us to send them 100 deals a year versus
Right.
your one deal. We don't use them too often, but I do have access to them. So if you're working with Quicken and you want to work with Quicken, call me. I can beat their rate.
Right.
I have a better rate than you have through retail.
And talk about your the fees that you guys have versus what banks and maybe Quicken.
Yeah, part of my history, I came from Wells Fargo before I got into this discountloans.com business. And when I was there, they had a $1,000 underwriting fee. If you've ever been younger and bounced checks, you know the banks are not your friend, right?
Right.
They're gonna pay the biggest one and then bounce the other smaller checks, right? So the banks are there to make a living.
Right.
And make a lot of money. And if you watch the stock market, you'll see they make a lot of money. And one of the ways they do that is, as your banking partner, who you bank with, they have that built-in confidence that you're going to get a good deal because you bank with them.
Right.
Well, the reality is their rates are the highest and their fees are the highest.
Right. So rates, you mean interest rates?
The interest rates
Right.
are higher there than with somebody like myself. We want to make a living, but we don't charge that underwriting fee of $1,000. We don't charge a processing fee of $700. We don't charge a credit report fee. We don't charge an application fee. We don't
So
charge
right
any
there, they're
fees.
saving almost
They could save
$2,500.
close to $2,000, $2,300 just in those things alone, and that's right to the bottom line at closing.
Right. As part of their closing costs.
Yeah, the down payment and closing costs,
Yeah.
what they have to bring as far as cash to the table.
So-
We're going to be $1,000 to $2,500 cheaper than the banks and a lot of our competitors. That's
Right.
why our name is Discount Loans.
And you can then use that $1,000 or $1,500 after
Help.
closing to
Yeah.
buy furniture.
Yeah.
But after closing.
Yeah, to get yourself a new fridge if you need one or whatever you might
Right.
need. So that's a big benefit of using us compared to our competitors. Is it's cheaper when it comes time to close the loan.
Right.
And
But
that
you
helps
still have
everybody
access
qualify.
to so many different outlets.
Sources
Yeah.
that we will put them in the right spot for their situation. Another example, FHA allows you to qualify with a middle credit score of over 580.
Okay.
Bank of America might not allow you to qualify unless you have over a 640 for an FHA loan.
Okay.
So if you're in that 580 to 640 and you got denied at your bank or credit union, call us because we could probably get you approved if you're in that space.
Okay. Yeah.
So there's a lot of advantages to working with us. One, we're local. We can meet you where you want to meet us. We can do it in our office. We can do it over the phone. We can come to Jessica's office and do it.
Yeah.
We do have the same technology as Quicken does as far as online applications. It's very helpful for some people who maybe have young children and can't talk on the phone after work. They've got a family life they've got to take care of. And their husband and wife finally at 9:30, 10 o'clock at night get to sit down and talk about applying for a mortgage.
Right.
Well, they can do that through a link on our website that I can email them, or they can just go to discountloans.com and apply. And I'll get an email and I can follow up with them and go over everything.
Yep.
So we've
And
tried to.
they're really quick to responding to. It's not something where you put in an online application and you're waiting days and days and days. They get back to you really quick.
Yeah, we definitely want to get to you quick. We know it's an exciting time to think about buying a house. It's a big goal for a lot of people and families and just individuals. So we take it serious. And I've been in this business a long time, and part of my favorite part of the deal is getting in the house.
Right.
It's like
that's
we did
the best
it.
part.
Yeah, it's like
right?
we got you closed. Again, we don't charge fees, but we do get paid. We are a for-profit company.
Right, of course.
But we get paid by our lending partners to originate the file. So if Jessica, your borrower goes to closing, they're not going to have underwriting fees, no process, none of those fees.
Right.
But they will show on the final closing disclosure, Discount Loans made $3,500 and United Wholesale Mortgage paid it to them. Or this credit union paid it to us.
Right.
But it's not a bottom line cost to them.
Pocket, right.
They're not going to pay for it and have it as a cost as far as cash to close that they need.
Okay, so that's good.
Yeah.
So a lot of people do have questions about what the difference is between closing costs and a down payment, and what are the closing costs consisted of for a buyer?
Yeah, in the state of Florida, Jessica, you're going to have to pay at closing. You're going to be prepared to have your down payment, right? So on that $200,000 home FHA, you need the $7,000 at closing, and then in addition to that, you're going to have to pay in the state of Florida 3 people in your closing costs. You're going to pay a title company to close your loan, provide you with title insurance. You're going to pay recording fees to the county that you buy the home in, and you're going to pay taxes to the state of Florida on the transaction. Those are your closing costs. In addition to that, you have what's called prepaids. Okay, so you have your down payment, your closing cost, and prepaids. Your prepaids are going to be where you pay 1 year of your homeowner's insurance policy at closing. So on that $200,000 house, you might have to pay $1,200, $1,300, $1,400 homeowner's insurance policy because you pay that for the year in advance.
Right.
Then in addition to that, on an FHA loan, for example, or most conventional loans, you're going to have to establish what's called an escrow account. An escrow account is additional months of taxes and insurance, real estate taxes and insurance that goes into an escrow account. They're going to collect an additional 3 months of homeowner's insurance and 4 months of real estate taxes into the escrow account. The 1 year of homeowner's insurance, 3 months of insurance, and 4 months of taxes, that's called your prepaids. Okay, so you have closing costs and prepaids.
Okay.
When you work with Discount Loans, because we don't have any $1,000 other fee or $700 processing fee or any other fees, you can use a factor of 3%. We'll cover all those things. Okay. So on that same $200,000 house, we need $7,000 for the down payment and $6,000 for closing costs and prepaids. So in that FHA loan, you would need is 7 plus 6, $13,000.
Okay.
All right. Now, all of that can be a gift or a savings or a combination of those things from either you or your family or your fiance's family or whatever.
Right.
But you can also ask the seller to pay your closing costs and prepaids. The realtor can negotiate to help the seller pay your closing costs for you in prepaids. And the way that would work, as you know, Jessica, is you would come to terms on negotiate a deal, and you could come up with $200,000, but you need $6,000 back for closing costs and prepaids. So what that seller is going to hear, okay, they're offering me $194, right? Because they're thinking about they're going to have to pay some commissions, they have to pay some fees to the state of Florida, title fees at closing. And then they have to pay off their mortgage in a lot of cases. So they're thinking, what are they going to net after they pay all the people they have?
Right.
So if they need $20,000 and 194 doesn't get them there, they're going to say, well, no, give us 203 and we'll give you back the 6,000.
Right.
Or give us 206 and we'll give you back the 6,000. But that's where your expertise just comes into play and your negotiating skills. To do that. It's very common. It doesn't make your deal not a good deal. And don't be intimidated by the closing costs and prepaids. Because it's a lot.
There's ways that we can.
Very often you can get those covered by the seller. And then you just need your down payment in that case. And with Discount Loans, it's a 3% factor to pay all the closing costs in the prepaids.
Right. Make sure that you have 3% of the purchase price of whatever purchase price that you are qualified for. Plus in addition to the down payment.
Or be prepared to negotiate and
Yeah,
the seller
or,
pays.
yeah, absolutely, yeah.
Now, part of the process of buying a home is you have to order an appraisal.
Yep.
That's something the buyer pays for at the time of the service,
Mhm.
and it is a very important piece of the process.
Oh, 100%,
It determines
without it.
what an independent third party thinks the home is worth,
Mhm.
and everything hinges on that. So you're not going to overpay for a house.
Right.
Okay, so if you structure that deal the same way we just discussed, and you said, okay, we'll give you the 206, we need back 6,000, seller's getting exactly what he wanted,
Right.
buyer's okay with what they're doing,
Right,
and then the home appraises for 204, you're $2,000 short.
right.
So then you have an opportunity to go back to the seller
We can
and
always
say,
renegotiate terms.
yeah, at that point you can renegotiate and say, okay, we can only pay you what the home is worth. It came in at 204, we still need the $6,000 to buy the house.
Right,
And the seller might say, you know, I don't want to put the house back on the market.
right.
Pay another 2 or 3 months of house
Right, now you're
payments.
3 weeks into the deal, you're closing in a week and a half, and the
And you
seller
know some-
says, well, I don't wanna do this all over again, knowing that now we already have this appraisal and we
And
know
it
what
could
it's
have the
worth.
same thing happen next time around.
Mhm.
So in a lot of cases, your expert Jessica Realtor can keep the deal together by saying, come on guys, what are you gonna start over and
Yeah.
have the same
Sometimes
appraisal
you can
happen in
split
60
it.
days?
You can have the seller pay half and the buyer, now the buyer, instead of bringing, $6,000 in closing costs, you're only bringing 1,000, which is a lot
But
better.
still
So
better.
there's,
So you need your down payment
Yeah.
plus one, and then they
Yeah.
call, or they say, okay, we will tap in our savings, or mom mentioned that she would give us 1,000 if we needed it,
right.
so
right.
something like
There's
that.
always
to
a
keep it
way
together.
to make it. If it's supposed to work, it's gonna work.
And
out.
everybody's motivated at that point. You got motivated
Yeah.
seller, motivated buyer,
Yeah.
and when that's the case, deals stay together. One important thing that we're offering right now through discount loans, on any conventional loan that closes between now and the end of the year, we're going to reimburse you for that appraisal that you paid for at the time of the service once you get to closing.
That's wonderful. So appraisals are usually around 350.
No, they're a little more than that now. Surveys are close to 350, 400.
Surveys, 350.
Appraisals are going to be more like 465 to 500,
Okay.
depending on the type of property and the purchase price and that type of thing.
Yeah.
Our promotion is we'll give you back up to $525 of the cost of the appraisal at closing.
Okay.
Okay, so if you
All
paid $500 at the time of the service,
Yeah.
we get to successful close, we're going to give you a credit back at closing for that $500,
Okay.
which again would make us a better deal.
Right, because now
than
you don't have the,
the fees,
original
plus we're
fees.
giving you back this money for
Yeah.
the appraisal.
That's great.
It is a great time to buy still. I know there's been some hiccups in the marketplace. People have seen rates moving higher.
Yeah, now that I've got you here, I think we need to talk about interest rates. I think everybody's wondering what's going on and is now a good time to buy and what it really means. So,
Yeah, I'd
yeah,
love
we-
to
what-
talk about
what's
that for a
the
second.
average interest rate?
Well, there's a lot of factors that go into an interest rate.
Yeah.
Okay, one is your credit score. One is the loan program you're doing. One is the loan amount that you're going with. One is the size of your down payment. All those things are going to affect what kind of interest rate is available to you. You can get an FHA loan with just 3.5% down, around 4 3/4, 4 7/8%.
Okay.
I just priced out a condominium, 20% down, second home, 800 something credit scores, perfect deal,
Yeah.
and the rate's 5.5 because
Wow.
it's a second home, which is more risk to the lender.
Right.
And the condominium is a little riskier to a lender. So anything that's related to risk is going to affect interest rates. And you can go online and see bank rate or whatever says, the rate today is, 4.5% for a $400,000 loan.
Right.
Well, the higher the loan amount is, the better the rate gets. The lender wants to make big loans with good credit on primary residences with as big a down payment as they can get.
Right.
All those factors are going to make you have a better interest rate.
Right. Because you're less risk.
Yeah, you're less risky to that lender.
Mm-hmm.
So, in general, rates are moving higher. They've moved higher substantially this year and specifically.
Yeah.
Okay, our interest rates are tied to the 10-year bond yield. If you go on CNBC and type in 10-year bond, it'll give you a yield. That yield was the highest it's been in 7 years this week.
Wow.
Okay.
This week's
Yes, it's 2011. So as that yield moves higher, rates go higher. Okay, that's the bad news. Okay, the good news is we've kind of settled in a range where rates are not quite as volatile as they were, say, 2 or 3 weeks ago, which is good. We want kind of stable rates. It is a new reality that they're not at 4% flat
Right.
anymore. They're
Right.
up higher. The best way to figure out what your rate would be to call myself or a mortgage professional and let them ask you all the questions so they can give you a true interest rate.
Right.
I could say, yeah, Jess, you could get 4 1/4. on a VA, but you're not a VA. You know, so it just depends on the type of loan they're doing and the amount of risk that's associated with that deal.
Yeah.
So, is it a good idea to buy now is your question.
Right.
And in my experience and in my estimation, it is a good time to buy now. The reason being is because the rates are going to be higher next summer than they are now.
Right.
On top of that, values have been moving higher.
Prices have.
So
absolutely.
if you compared, you know, your $5,000 a month that you have to work with for buying, and you compare what you can get today with current values in homes and current interest rates,
Yep.
compared to last summer, you know, a year ago this time,
Right.
your buying power is going to be limited.
Right.
You still
So
make
you
the
could
same
buy a house
$5,000.
that's this big, but instead you're going to buy a house that's this big, and then next summer you're going to buy a house that's this big.
Right. Or
All
instead of
because
being
of
in the
interest
area you
rates.
want to be,
Yeah.
now you've got to go out of town because
Yep.
that's what your budget affords.
Right.
So unless you think by next summer you're going to double your income,
Right.
you know, or something,
Yeah,
which
there's
have
always
you
situations.
could be a reason to wait, right?
Yeah,
If you know
yeah.
you're getting a new promotion or something's going to change in your life, it's going to help you have more buying power. You might wait, but ideally you'd rather go sooner than later because rates are moving higher and values have been moving higher.
Right.
It's not all doom and gloom. The reason why rates and values go higher is because we still have an active market as far
Right.
as the values going higher, and the rates are moving higher because our economy is strong,
Right.
which that means there's more people working, making more money in general, and all those things are allowing our Federal Reserve to raise rates,
Right.
and that's why they're doing it.
Right.
Is we've had kind of artificially low rates for a number of years due to the Fed policy of loosening is what it's called, and now they're in a tightening stance where they're going to continue that way for the foreseeable future, as best we can tell.
So yeah, the interest rates are a huge part, but
Yeah.
it's interesting, like you said, depending on what type of loan you're getting or what your credit is and things like that, that varies into what your interest rate is
Exactly.
going to be too. So
And now-
you
and
have to talk to somebody.
And one of the things that we can
about
offer
this.
your clients, Jessica, is, again, there's no cost or obligation for doing the application, pulling the credit, and a lot of people
Yeah, just like-
are
just like
scared
you
to
guys.
even have the conversation because they know they've got a medical
Right.
collection, or they know they've got something on a car repossession from 4 years ago.
Right.
So what we can accomplish, even though they may not be approvable right now,
Yeah.
would be to say, Jessica, you need to do X, Y, and Z. In 6 months, you're going to be good to go.
Right.
Or in a year, you
So
renew
do you
your
think
lease.
it's worth reaching out to you and maybe not pulling the credit yet, but maybe even just talking to you and telling you all of the payments that I have monthly and kind of
Yeah.
asking you, what do I need to do to get better? Or maybe, you know, I can see my FICO score on my bank when I log in and this is an estimate, you know, based on this, what should I do?
Yeah, that's a good point, Jessica, because a lot of people are monitoring their credit, which is a great idea. I do it. I'm sure you do. Credit
Yeah.
Karma, some of these different services that are out there. And that is a great resource for a consumer. However, you'll notice on those services, they don't advertise mortgages to you.
Right.
They have car loans, auto loans, or car loans and credit cards, right?
Okay.
They'll say, we think you're a good candidate for the Discover card,
Yeah.
or whatever it is. They don't say, call
Oh, I
Chad
get
because you get a
mail
mortgage.
all the time with credit
Right.
cards. Here, you approved for this much.
Yeah, so
No.
So the catch is with those things, they are very useful tools, but we pull what's called a residential mortgage credit report. And there's different factoring that goes into getting that score compared to the consumer credit score. So
Okay.
it would be smart to do the application, to pull the credit, to make sure what's on there and what's not on there.
Right.
There is erroneous information sometimes on credit reports that they truly don't owe the money.
Right.
Well, we can work with our credit services company to remove that and make sure your score is accurate and make sure, for example, I had a couple one time who had a really tough time. They had a bankruptcy, they had the death of a child. They, just a horrible situation. They ended up kind of getting their life back together. They had reestablished new credit. They had 3 credit cards with $1,000 limits, and each of the cards were like at 900 on them.
Yeah.
That hurts your score.
Yeah.
You want your credit limits your balances to be about 30% or less than the limit. They
Okay.
had saved up a lot of money to put down, like 20 grand, but their score was only a 565, and I needed a 580.
Right.
So I was able to say, hey, let's pay down these cards, not put down quite so much money.
And you don't have to pay them down completely, just
Just
to
pay
a
them down
limit.
to $100. So instead of putting
Yeah.
down 20 grand, they're going to put down 17,000
Right.
and close those and pay them down. And then we waited 30 days, re-pulled the credit again, and they qualified.
Wow.
So see,
Yeah.
it was something that could happen just that fast.
Right.
But if they never came in and talked to somebody ahead of time,
They would have never
they would
known.
have not known to do that. And
Right.
may have just said, we don't qualify.
Right.
But the truth is we want to help you qualify.
Right. Exactly.
And then whether you can close in 30 days or 6 months or a year from now, we're going to be here. We want to help your
Right.
customers. So it's worth the exercise, especially if you've never bought a home. You can learn a lot about the process.
Yeah.
You can make sure you're ready to go. Maybe you're a family that's been renting and you're going to have your second child. And it's time to, we really got to see if we can buy a house.
Right.
Or not. If we can't buy today, what do I need to do?
Maybe we can maybe we can buy in 6
and we'll
months.
give you advice. We'll tell you to pay this account off. Don't worry about that one. For example, with FHA financing, medical collections don't count against you. So if you had a TGH bill for $4,000, you're like,
Yeah.
I know I can't qualify for anything because I've never paid it.
Right.
Well, FHA doesn't care about medical collections. So that doesn't matter. If you had a car repossessed and you know you've had it on your car, you have an $8,000 charge-off is what it's called.
Mm-hmm.
Well, for FHA, charge-offs don't count against you. So even though you might have damaged credit,
Yep.
it doesn't mean you can't qualify. It depends on the nature of the credit. If you're sitting there letting your student loans rolling late or just not even
Yeah.
paying them, you got to fix that.
Yeah.
Okay? If you're applying for an FHA loan, that's a government-backed loan.
Yep.
Well, if you're not paying your other government-backed loans,
Then they're not
going to
gonna-
give you another one, right? So we would say, Jessica, okay, call them up, make a plan. Let's see 4 months of payment history.
Mm-hmm.
Now we don't have to worry about that anymore.
Right. And 4 months in the grand scheme of things when you're purchasing a house, I mean.
Right, especially like maybe now you're even thinking about a lot of people that are trying to close before Christmas, which we can do no problem. I can get you
Yeah,
closed
oh,
before
yeah.
Thanksgiving, no problem
Yeah.
still. It takes 30 days from the time you find a home till we're going to close you at
Yep.
the max.
Yep.
But then some people are like, I know we're going to get a nice tax refund, right?
Right.
After the first of the year.
Yeah.
And that could be our down payment. You know, we can save up $4,000 here. We're going to get back $4,500. We're going to have $8,500
Right.
come tax time to work with.
Mhm.
Well, call us now. Let's
Right.
make sure that if there's credit
But that's
issues,
the only.
that we're
yeah.
just waiting on you to get your money together.
Mhm.
That's beneficial. It's a good exercise.
Yeah, that really is.
And once we pull the credit, it's good for 120 days. So if you're planning to move in the next 4 months,
Yeah.
it's okay to go ahead and pull the credit now.
Okay.
And if again, we
Yeah,
can
that's a
work
good
on
thing
things
because
and get it
everyone's like,
restored.
well, if I pull my credit now and then I'm not ready to buy, then it's going to ding me again. Well, now you've got 4 months. So
Right. And the
that's
ding,
awesome.
just so everybody knows. Okay?
Yes,
I
yes,
hear all the
explain
time.
the ding.
The ding, okay, is not going to knock your score down 30 points. It's going
Right.
to knock you down on average 3 to 5 points.
Okay.
Okay, so if you're sitting there at a 770 score, it might knock you down to 767. Okay,
Which is
you're
still
not going to
really
go to
low.
600. It's not going to. You're allowed to buy a house, and you're allowed to even shop for a mortgage.
Right.
If you call me and what I tell you sounds good, maybe too good to be true, and you want to shop me, you're more than welcome to do that.
Right.
And if you call another, Jessica Beggins brokerage tomorrow, and she pulls your credit, it counts as the same ding as mine.
Right.
Just like if you go to a car dealership and you go to Chevy and Ford and they all pull your credit, it's all just one hit. Okay,
Yeah.
you're allowed to shop. Now, if you go every month and apply for a mortgage, it's going to continue to hit you 3 to 5 points.
Right.
But you have every opportunity to shop for a mortgage and to, to your point, you can't find out what you're able to do without having the credit. So,
Right. So you gotta-
regardless, whether you're buying now or you're trying to figure out where you stand now,
It's
it's
worth
worth
the
the
3 to 5
exercise to
points.
take the hit to your credit
Yeah.
to make sure there's no issues. I had a lady recently, great credit, school teacher in South Florida, got referred to me by somebody. She's wanted to buy a house. She's an older lady, close to retiring. She's
Okay.
moving to Sun City,
Yep.
and she had not pulled her credit in a number of years. I pulled her credit. She had gotten involved with some development that she was going to buy a unit in. It turned out that the deal all went south, and she had a $7,000 collection on her credit that she did not know about.
Oh.
Because she never
wow.
moved in there, and I guess
So
they
she's
didn't have
been
her.
sitting there and sitting
Yeah,
there.
and it's
sitting
been on there for
beating
like
her
4
up.
months. So
Yeah.
her score was getting beat up, but that does matter. If you have a collection over $7,000, we have to address that before you're going to get approved.
Right.
So it was news to her, and I had to send her who was trying to collect it from her. She was going to get an attorney.
Wow.
She doesn't want to pay them the money. She doesn't own the money. She
But
doesn't want
just
to
the
she doesn't
fact
want to go on a
that
payment
she
plan because she doesn't
talked
owe
to
them the
you.
money.
Yeah.
And everything looked like a slam dunk going through the application. I pulled the credit and that pops up. This lady, like I said, she's about to retire. She's not on Credit Karma, but you would have seen
Right.
a collection pop up on that and know to
Yeah.
deal with that. So it's not like I had access to secret stuff that you wouldn't see on Credit Karma.
Right.
It's just different factoring goes into our score, and it's quite common that the Credit Karma score is higher than the one I'm going to get.
Okay.
People will call me and say, yeah, I'm a 740 on Credit Karma. And we do the application, and part of that process when we pull the credit is for mortgage purposes, you get rid of your best score and your worst score.
Okay.
So use the middle score as your qualifying credit score.
Mhm.
That's the one that matters.
Oh,
Okay, so if the 740 is your highest score, you can have a 700 with another bureau and a 650 with another bureau. They only know what's being reported to them.
Right.
So if negative information got sent to Equifax, TransUnion never saw, their score is going to stay higher than Equifax's.
Right.
So that middle score is what matters, and quite commonly, it can be a good 20-point difference between a consumer credit score and the one we get.
Wow,
with the
that's
same
a
bureau.
big difference.
With the same bureau.
Yeah.
And again, the credit score requirements are kind of set in stone. FHA for 580 credit, middle credit score, conventional 620.
Okay.
If you're a 618, you don't qualify for that loan.
Right.
We've got to get you over 620.
Right.
So that would be where we'd go through it. What can we do to get this score up just a little bit?
Right.
So just because you're fall short, or you see on Credit Karma you're a 618,
Right.
doesn't mean even if you're on WePull it's a 598, there might be some quick fix
Right.
to get you higher. Okay, so your score can vary a lot from month to month depending on your credit balances.
Mm-hmm.
Ideally, you want those limits to be, you want your balances to be about 30% of the limit.
Mm-hmm.
I recently went on a vacation. I spent a good bit of money, tried to use my points for my card.
Right.
My score, I watched Credit Karma myself. My score went down 20 points, so I didn't pay it before they reported it to the bureaus.
Right.
And then I did pay it. The next month it went right back up. So your score changes all the time, and it can be very helpful to talk to somebody like me, Chad Morris with Discount Loans,
Yes.
to make sure that I can see those things and say, well, if we just do X, Y, and Z, you're going to be fine.
Right.
Versus you getting bummed out and thinking,
Which is
I don't
good
qualify.
to hear. It's good when you talk to someone and kind of get that feeling instead of just looking it up online and trying to figure it out all on your own.
And then the guidelines change all the time.
Yeah.
So that's part of being a professional. We're licensed. We have to do continuing education.
Right.
We have to keep up with what's happening in the marketplace. And the best way is a knowledgeable loan officer to help you guide through that process. And that's what we do at Discount Loans. We know how important this transaction is to you guys. We want to make sure you're taken care of. We'll walk your hand through it. If it's your first deal, if it's your 10th deal, whatever level of service you require.
Explaining it from, if you need the bare basics, they'll bring it down to the bare basics. If you've done this a million times, they'll speed it up and do it quick.
Make
they
sure
do
you have a
really
good
well.
experience.
Yeah.
And that's a great thing. Jessica's got the same passion and drive for her clients as we do. And part of that has resulted in us having a true partnership with Beggins Family and DiscountLoans.com.
Yes.
So if you use those guys, we'd love to help you. And one of the great parts about that relationship is everybody's looking out for you. Everybody's on the same team. We want to make sure that you get the house on time at terms that are favorable for you, and not everybody pointing fingers at each other,
Right.
saying, well, your realtor stinks. No, your mortgage guy stinks. That doesn't make anybody
well, the mortgage
happy.
guy messed up real bad this time.
Yeah.
You know, we all work together as a team and we're all focusing on the same goal.
Of the closing.
Yes.
And you
Getting
having a home
the
that you
buyer
want.
to closing, getting the seller to closing, whatever it is, we're
100% committed.
yeah, we're a whole team.
That's what we care about.
Yeah. So I hope this video helped for you guys and answered a lot of questions. I mean, Chad's a great resource. So if you have questions after this, definitely comment down below. I'll get you guys in touch with each other. And
Yeah, you can reach me at chad@discountloans.com or by phone at 813-495-9542. We'd love to talk to you wherever you're at in the process.
Yeah.
And see if we can get you into the goal of homeownership.
Yeah, that's great. Well,
Yeah.
thank you so much for explaining all these things
Thanks
in
for having me.
detail. I
It's great
appreciate
to see you
it.
again.
Thanks, Chad.
Thank you.